Your family office was built to do one thing: protect what you spent a lifetime building. But here's a question almost no one is asking out loud. What if the structure underneath it has quietly stopped protecting you and started creating risk instead? Now, because the real danger isn't the big penalty that you see coming, it's the slow pileup of small misses that sit here for years until someone finds them all at once and reads them as a pattern. Now, today's guest knows exactly where that line sits between protection and exposure. And by the end of this conversation, you will too. If you caught our last conversation, you already know that my guest doesn't deal in theory. Susan Lindeque is the founder and CEO of Avestix Group, a woman-led, woman-owned fund management firm built around alternative assets. She's a chartered accountant, the chief investment officer of her own single-family office, and her personality has been raised, invested, or managed more than $1 billion across 100 private acquisitions. Susan, welcome to the show. I'm so excited to have you back.
Yeah, no, it's always a pleasure to be back, Stacey. Yeah, it's good to be back. And I'm especially excited about today's topic. It's a very complex and difficult topic, but I think it becomes more and more relevant for a lot of family offices. So I'm really excited to help um, to make it to make it simpler and not that complex.
Yes, definitely. Because I find a lot of people find it complex when it doesn't really have to be. Now, Susan, for years, a family office could handle compliance with a good CPA and quarterly review. You're saying those days are over. What actually changed?
The big thing, the big thing is that the money has changed. Where the money has moved. So previously, a lot of people has just invested into public markets, but these days, a lot of people invest into alternative markets. Alternative markets are like real estate, venture capital, data centers, anything art, um, exotic cars. So what happened is because those money are all private and those assets are all private. So what's happened is that previously the family offices were very private. They don't have to give any concerns about complexity or reporting or any of those. And those days are over because now the second thing happening is those families wants to co-invest. They don't want to just go into a passive fund and just receive their return on the income. They want to be sitting at a table, make the decisions, be part of the due diligence. With that all comes complexity. But I think what a lot of them don't realize, if they want to do that, then it's the reporting and the requirements from a regulatory environment that I have to basically adhere to as well. So there's a lot of legislation and frameworks that was built for your registered investment advisors. And now all of a sudden the family offices said, "Oh, we want to have a piece of the cake as well. We want to share in the profit." But what I don't realize is with that comes a lot of requirements in terms of state taxes, in terms of federal taxes, in terms of reportings, and that's where all the problems is starting.
Right. Now, why is compliance suddenly, accelerating the way, it is? And why isn't the cold old CPA and quarterly review model enough to keep a family safe anymore?
So previously, it was just simple. You know what? You just got one investment or one transaction, and that was reported. But now, because the families are getting involved in a lot more co-investment and direct deals, there's a lot more reporting that's happening. And on top of that, it's layered. So you got like your beneficiary ownership, or the structures are very different. Like the family offices can have the structures like in taxes, sorry, in trust or in LLC, or they got it into an offshore entity. So multi jurisdictions makes it very, very complicated. So it's all the complexity that comes with that in terms of where are you based. Are you based in the US? Are you based in an offshore um, tax haven like BVI, or are you offshore or you may be operating out of Australia, but you've got investments into the US, or you're operating out of South Africa, but you've got investments in the US. And it's all about whether you really truly know where all the complexity, where all your paperwork and who's in charge of it and where's all the elements. That's the main thing.
Now, you said a single family office can quietly rack up dozens of separate regulatory obligations in one year. Beneficial ownership, reporting, like new anti money laundering rules, tax filings in the state that no one expected. Which one actually catches, sophisticated families off guard?
I think it's the complexity in terms of, definitely in terms of your beneficiary ownership. Who is the owner of the investment? Where does it sit? Is it, and it's the complexity comes in with the entities. So it's whether it's in a trust holding, what kind of trust is it? Yesterday I listened to somebody and he said, you've got so many different trusts now. It's no more just one type of trust. You now got a disability trust. You got a discretionary trust, and every every country are different. So with that also come then obviously your KYC, your AML, but also your reporting. Previously it was enough to just report on a quarterly basis, and then once a year you had your financial reports. Now with AI we move into almost like a weekly basis, and that's possible. And I don't think it's that far in the future where you're actually going to have reporting on a daily basis, or even probably on a minute basis. It's going to be real time, that you would been able to do that.
Yeah.
So it is the structures and the complexity underneath that the family offices are not built for this. And it's not just the family offices, it's also your ultra high net worth individuals, or maybe somebody that's got a very successful professional athlete that come out into a lot of money, they had an exit, they get sponsored by huge brands and names, or a music artist, and all of a sudden they have to deal with all this complexity in terms of what are they going to do with their money. They're then looking at new investments, but new investments always come with, you can have a data center project in, for instance, like in Washington DC, you can then have a venture capital deal coming out of Silicon Valley, but you can have an offshore opportunity coming out of the Caymans. So it's really about how do you manage all of those investments and opportunities, and how do you track all of them? That's the biggest challenge.
It's very true. And for someone listening right now, what's the obligation that they most likely are overlooking without even realizing it?
I think the biggest problem that a lot of the people got is, you think you got your CPA looking after all your tax stuff, then you got your lawyer that's looking after all the legal stuff and make sure that there's no issues around legislation. And then you got your wealth manager coming in, and your wealth manager is actually looking after the portfolio. But if your wealth manager triggers a position, and that position then create a tax event or a liquidity event, or there's a capital call from an investment that you've made. And the biggest, I think, one of the biggest problems that I also see faces happening is that when, like, the patriot of the family office, or the the um, the principal of that family office is falling away, and all of that wealth get then transferred to the woman. And we see this happening over and over on a daily basis now, where the women just don't even know where to start looking for. They got, and your CPA, your wealth advisor, and your attorney, they all work in silos. So there's no crossover between all of them. And and most of this very ultra high net worth individuals basically got two or three people working in-house, and then they got advisors, which is not a problem at all. But a disconnect is, and that's the gaps where you see in between, is where something happened and the one doesn't talk to another one, then that's really a big, big problem.
It is. It really is. Now, this is, Nick. I guess, this next part feels more structural, not personal. And I think every principal needs to hear it. Like the CPA handles the tax return, the attorney handles the entity structure, the wealth manager handles the reporting. Each does, their piece well, and the family is still exposed. Why does that fragmented model fail so quietly?
Because that's the gaps that I explained, in between each of them. Because if there's a liquidity event that gets triggered, that basically creates a tax event. And if your tax person is not aware of that, or if there's a capital call for you've made an investment and it's over say 1 year that you have to make certain payments, and that basically get called, and every single thing needs to be reported. Every single thing got an obligation in terms of forms, whether you need to fill that in on a state level or whether you fill that in on a federal level. So I think that's the danger when you don't have the systems in place to make sure what that you don't have sorry, a complete dashboard that gives you 24/7 exactly what's happening, where are you. And I think, Stacey, as I said, what, when there's wealth transfer happening to somebody that is maybe not that involved in the business, and a lot of them is the woman is not involved in the finance or the business at all.
Yeah.
That's the big danger, because they inherit some wealth and they got no idea even where to go. So most of the times the husband will say, here's a list of advisors if anything happened with me, but that's not good enough, because they got no insight of what's happening, where's all this stuff, and the complexity, I think, is just becoming, especially as we move into a world where we now get multi-jurisdictions, we've got very complicated tax structures. So um, that is really where the complexity comes in, and that's really where the danger is, because then you get into situations where you can really get into penalties with the IRS or with overseas tax legislations. So that's really where, and if it starts compounding, that's really becoming a huge problem.
Now, what does it actually cost a family when no one is holding the complete integrated picture?
It can cost millions, because at the end of the day, if the IRS come after you and they start having penalties, they can put liens over your assets. They can even basically take over your bank account. So it got a massive problems. The banks can even step in and they can actually close your bank account as well. So there's really huge potential in terms of just what can go wrong. So people don't just always think, they just think that I'm just creating all this wealth and this is all good, and I got my CPA and my lawyer and my wealth advisor to look after all of them. But what I don't realize is, if they don't know exactly who's the person in charge of every um, opportunity that I do, or what is the implications of it, and especially because everyone works in silence, that's where the gaps are, and that's one of the dangers that I really need to look out for.
Right. Now, for everyone listening, if you're feeling that quiet, unease right now, the sense that your structure has grown faster than your controls, that no one is truly watching the whole board, then this is exactly what this conversation, you definitely needed today to hear. Follow the Advisor Business Podcast right now. Every week we bring you the operators, investors, and builders who help you protect what you've built and structure it to last for generations. Now, Susan, you've, said the scariest danger isn't the one big penalty. It's the slow accumulation of small failures, filed form here and an unreported item there. Each looks like minor on its own, but how does that slow pile up sneak onto families who are generally believe that they're doing the right thing?
The big problem with that is that it will start showing a pattern, and it will, if you miss one, then you're okay. If you miss two, you can maybe say, well, that was a problem. But if it's starting to be continuous, then there's a real big problem somewhere. And then most of the times it just showed that a wealth is not on a solid structure or infrastructure, and they just cannot handle all the administration and all the legislation happening. So, or that you had to adhere to in terms of just completing forms and administration. So I think the positive out of that all is that we're in an area where AI is absolutely going to automate the whole back end. That's why I'm so passionate about Claude and about other open source AI, artificial intelligence systems out there, because it will just help to this huge burden that we've been accumulated over the last 25 years will just help reduce that and help to break down some of the complexities that's there. So AI agencies will play a huge, massive role going forward in anything and everything that we do. So I think that's the big thing, is to look out for those patterns and then to realize that the system is just not geared up for your infrastructure that you think that was always good because of the complexity, because of now of co-investments, that people want to do direct investment. It's no longer just hand it over to a fund manager and think they will have all the burden of legislation and adherence as the investment manager used to be, and that's what they've been trained for. And now when families and ultra high net worth individuals starting to take that on themselves, they also have to take on the risk of all the compliance, and with that comes fines and penalties if they don't adhere to that.
And what's the earliest warning sign that controls, underneath the wealth, are weaker than they look?
I think it's when I always say to somebody if they come to me, I said, let's start and map out what you got where, because if you don't even know that, it's not about even building a system. You can build a system for anything. You can have AI or technology used for everything. But if you don't know your whole holistic picture, if you don't know where's your entities, if you don't know where's your offshore tax structures, if you don't even know where's all your investments and what does it mean and when are they going to exit, have a really good consolidated view out of them, then that in itself, it just means that the foundation that you build everything on is so weak. And that's unfortunately happening with a lot of people, because most of the times they've just been taught, you just go and get an entity, an LLC, or you get an incorporated, and off you go. But I don't think of all the compliance and all the consolidations that rolled out, and who's the actual owners, and where does the money going to flow into, and what does that mean, and what's the tax implications then for everyone. So I think it is to really start looking at the overall structures, your overall investments, and as we go into the digital world, what we're going to end up with instant settlements that's happening. You're going to end up with some digital currencies. We see already a huge, massive wave that's happening with stable coins, because it just basically allows us to immediately settle. Then another big thing that I think a lot of people don't realize is that the stock exchange is now getting tokenized. So by the end of the year, I think that will be done and will going through. So even that means that there's more reporting, because now all of a sudden there's just more, it's more fractional, and you've been able, and that's even more paperwork that you have to deal with and that you have to report to at the end of the day.
Right. And once a family spots it, like how do they actually, get ahead before an auditor does?
That's why I said I think one of the big things is to really look at where's all your investments, where's all your holdings, what is all your companies, and where does it sit in terms of a jurisdiction, in terms of a country, for instance, like do you have it in Europe, do you have it in an offshore tax haven, and what is all the implications. I think if you sit down and map out all of those, and then next to it go and say, well, who's responsible for it, who's the parties, because you can have end up at the end of the day probably like with 20 different advisors, and that's the complexity, because you can have somebody, you can have 3 different advisors in Australia, 3 different ones in South Africa, 3 different ones in Europe, 3 different ones in Cayman Islands or the US. You can even have, even the US, every single state you have to report a different kinds of obligation. So it's becoming really complex, but I think sometimes old school just work. I love a whiteboard, just a whiteboard, and sometimes I'll just literally draw on all my structures and just in front of it, and then I know exactly if you do that and have a person's name behind that. And it's also a good measure for somebody that is in your succession planning, that you want to inherit some wealth, to leave them sometimes with a handwritten piece, because even sometimes if anything happens, as we've seen in a computer, can your software can get corrupted, or a Word document can get corrupted. So if you got that, and I mean, it's weird to say that, and probably a lot of the younger generation will say, well, we don't believe like in a safe anymore in a house. What is that? It's all digital. But I think if you have a backup system and you clearly explain where's everything, where's your holdings, and I don't even talk about digital holdings, you know what, and a lot of them people think, you know what, we bought Bitcoin on Coinbase, or we bought it on Robinhood. It's an absolutely nightmare when somebody falls away to transfer that over to another person. Not even to say that you need to get your seed freeze or stuff. So it's extremely important to have all of those institutional. Avestix, for instance, have partnered with an institutional custodian company for all our digital assets that we hold on behalf of clients, as wealth management, which is, I think, so important that you know at the end of the day, if anything happens with anyone, they can go there directly and they can inquire.
Right. Now, this is where your work, really lives. And, and it's, a reframe that I actually love. You say, most families treat compliance as an annoying cost to minimize, but the ones who get it right treat it as an architecture, like built into structure itself. Those, in your words, are the families who actually sleep at night. So walk us through it. Like if a family came to you tomorrow and said, redesign our compliance from the ground up, where do you even start?
I don't start, definitely not with the system. You know, I don't even look at it. I literally start and look at where's all your investment holdings, where do you got it, where is it from a jurisdiction perspective, and who's the advisor that's responsible for all of that. And that can be all kinds of assets. It's not just public assets. Public assets sometimes are much easier. It's on the stock exchange, it's in a brokerage account, so it's a lot more visible. But the biggest problem is your private assets. You know what? Where's that exotic car? Where's that expensive jet or your yacht? What is the cost of a big mansion property on Palm Beach, for instance? Like those are all the kind of aspects that you have. And then when you start breaking it down and to say, well, where's my real estate, where's my venture capital, where's my public equities, where's gold? So many people now basically buy gold and silver just because of all the geopolitical instability that we went through in the last couple of years. They said, well, gold is a good hedge for all the instability. But then where is that? Is that in a bullet that you buy somewhere in London, or is it real hard gold that you put in underneath your bed? That's where I normally start. I literally map it out on a white paper and said, let's start from there. And then you can start building systems around it, you know. Then you can really start building what is the architecture that you need to put in place to actually get all of those, to basically, to actually have a system that you then create around that.
Right. And for the principal who treats it, who feels buried by all of this, like what's the very first move that gives them, back control?
I think that clear understanding of where is everything, where is everything. And also, I had a situation like with one of my friends, she is in a different country than the US, and they had money in the US. Her husband passed away, unfortunately. And then, how do you get that money out if you're not even a citizen or a resident of the US, which cause a lot of problems, and it can take years before you resolve it. So I think to really know, and I think I'm a lot passionate about women and where we are going with the 83 trillion dollars that get transferred, is really to make that accessible and have that discussions around the kitchen table to say, well, this is where everything is, because um, life just happens, what. Unfortunately, sometimes you wake up, you feel good, and then by the end of the day, something happened to anyone, a loved ones with you. So it's really important to have those, and then you can sleep. Then you can have peace of mind if you know my doesn't matter what happened, the rest of the family will be taken care of.
Right. Exactly. Exactly. Now you've built across real estate venture and public markets and digital assets, and you see something most people miss, that compliance done right isn't that, what slows wealth down. It's what actually protects it. So what do families who treat this as an architecture understand that others don't?
The main thing is that I understand that wealth for generations is built on structures, it's built on architecture. It's basically, it's a system, what. That's why institutions are doing so well, because they got systems embedded into them. If you do this at the back of a piece of mind or a piece of paper, or like a lot of business owners have started like 50, 60, 70 years ago, a lot of that was just done at the back of a cigarette box. So um, those days are over, and the complexity of those are just completely gone. So I think if you realize that you built a solid foundation, I always said, if you build a house and you got a really solid cement foundation, it doesn't happen what happened to the rest of the house, because you will always been able to maintain the foundation and always been able to rebuild on it. And
Yeah.
that's the same with any infrastructure. If you got a solid um, multi-jurisdiction structure to protect you, but also in terms of taxation, know where it is, and then also have your succession planning for generations to continue. And I always said, it's not just about just preservation. It's really about your legacy that you want to ensure,
Yeah.
that you want to continue, and what does that look like, and what do you need to put in place. And unfortunately, all of those come with a huge cost, because legislation and adherence and having the right people look at it. But again, I think with AI coming in, we're so fortunate, because that cost will just be condensed to almost zero. So
Yeah.
the, the models will change dramatically going forward.
Right. I agree. And what's the one shift in mindset that actually turns compliance from a burden into the very thing that lets a family finally rest?
I think it's just basically that mind shift to think that you need to protect your wealth, and what do I need to do that? And that will be able to let them sleep at night. So it is, I think you shouldn't see it as a cost center with just another cost. You're not. I think if you see it really as part of the infrastructure, really part of the architecture that you need to have, just basically becoming a fundamental instead of just a cost center. This is just another tax or an invoice that I need to pay to get this done. Well, if you actually consider this, well, this is actually the foundation where I built my wealth on, then that changes everything, the way that you look at it, and just that will generate a lot more for you in terms of wealth going forward.
Right. Now, can you tell everybody about your services and what you provide?
Yeah, so Avestix is effectively, we started out as an investment platform, but we've really has moved now into a multifamily office platform where we provide a lot more services for various families. I'm super excited. We also is in the process of developing our technology, and I'll make some big announcements onto that, where we specifically going to focus on a lot of the problems that that some of the families have in terms of back-end Excel spreadsheets, in terms of just the complexity that's coming with that, multi-jurisdictions, very complicated insurances, taxes. So we're going to start building our own technology very soon. And then we've launched the Avestix Frontier, which is our event platform for communities. We don't call it events, we really call it our communities, which will want to plan for succession planning going forward, and really integrated AI with corporate structures, with taxation, how to break down that complexity line. And we've going to do quite a bit of cruise lines on the European cruises from next year specifically, and then we'll have big one massive summit in Cayman Islands where we'll invited some families to come with us behind closed doors and just tackle one of the most, I think, one of the biggest problems that all of us encounter, but I think also what is the biggest problems out there that we can contribute and really make an impact, and what does philanthropy really looks like, and how can families co-invest. And exactly, co-investment comes with a lot of additional complications. How do you treat it? What is the tax consequences? Where is everyone coming from? But I mean, so we're super excited to launch Avestix Frontier, our multi-service and multi-family office services, as well as the technology that we will hopefully develop to make a lot more easier for a lot more people.
I love it. I love it. And can you tell everybody where they can find you?
So there's a couple of things. So obviously, I've got now my own podcast channel, Mentoring of Wealth. Then also on LinkedIn, I'm really active on LinkedIn. Anyone can always DM me on LinkedIn or send me a message, and if it's relevant, the team will reply to that. They can. We've got our own Substack newsletter as well, so they can always reach out to us on that. I think those are we will increase our Instagram a lot more in the future, but I think there's multiple ways that I can get hold of us in terms of that.
I love it. And for the listeners out there, a family office isn't protected by how much wealth it holds. It's protected by whether the structure underneath it has kept pace with the rules it lives by. Now, Susan Lindeque, it has spent a career learning the difference between a structure that protects and one that quietly creates exposure. And today she showed us how to land on the right side of that line. Susan, I want to thank you so much for being here, and I really appreciate it. And for the people out there, if this episode made you look at your own structure a little differently, share it with someone who carries the weight of these decisions, and they'll thank you for it. And I have to say thank you once again. You know, you always bring so much information that is so helpful, because I think a lot of people are oblivious to a lot of this stuff, and it's so simple to learn, by someone just guiding you, step by step. And I want to thank you for being that person who is guiding people. And especially because now you're focusing also, you work with men and women, but you're trying to help women really get a better understanding so they can grow and understand finance and really improve their overall wealth and their lifestyle, and to really get, everything on the right track. So thank you so much for what you're doing and for everything you shared on these podcasts. And once again, you can find Susan. You could just even type her name and her podcast will pop right up. She had so many episodes on there that you can learn so many different things. And I thank you once again, Susan.
Thank you so much. It's always a pleasure. Like I said, today was really complicated. It's tax structures and multi-jurisdiction structures are always very complicated topics, but I mean, we're here to help it break down the complexity. So it's a pleasure to be here.
Thank you. And you have a great day, and I look forward to talking to you soon.
Good. Thank you. Bye.
Bye bye.